Hello and welcome back to the channel. My name is Wajahat and today we are starting a new series. Now, when the entire lunar collapse happened, I pretty much lost a lot of my net worth. I overinvested and I said to myself, let's make a new series where I kind of build my portfolio from scratch with you guys, kind of talk you through kind of some of the things that I'm thinking, some of the assets that I'm buying, and I thought let's do a series. So this is a new series. It should be lots of episodes. We should have lots of new episodes coming every week or every other week, really, just kind of covering my portfolio and see how it potentially grows. So the aim of this portfolio, let's see what it goes to, but I've called it the 0 to 6 figure portfolio because that's kind of what we want to do. We want to grow this to 6 figures. I think that would be a remarkable achievement, starting with little capital and just kind of seeing where we're going. So yeah, that's the intro. Let's get straight into it. Let's kind of talk about kind of what we're doing with this portfolio, kind of how we're going about it, and kind of the kind of time frame as well that I want to kind of achieve this in. Now, this is going to be a very risk on portfolio. I want to make sure, really clarify this point. Everything that I say is obviously not financial advice. I'm just a random guy. I'm a doctor, but I just do this as a hobby. I really enjoy the crypto space, but yeah, by any means, I'm not a finance expert. I'm just someone who has a really strong interest in this space. So yeah, that's pretty much it. Don't copy me because you're probably going to lose money. This is definitely going to be a risk-on portfolio. I think, the majority of people understand. Not everyone, of course, but the majority of people understand that having a portfolio has to be balanced. You need to have some assets that are more risk on than others. Having, for example, some Bitcoin and Ethereum in your portfolio as a core holding with some stable coins. I think that sounds like a sensible portfolio, and I think most of you probably watching agree with that. In this portfolio, we're not going to do that at all. So this is going to be money that if it does go down to zero, I will be okay with. So please don't copy me. This is a risk on portfolio. We're going to see what we can do. Of course, we're going to be sensible with it at the same time. We're not going to just go and find the next dog coin and put all of our money in that. No, we're not going to do that. We're going to have some sort of sense, some sort of theory and rationale behind the decisions that we're making with this portfolio, and I kind of just want to bring you guys along this journey with me. I think it could be interactive. You could give me some of your own tips about my portfolio. You could give me your own comments, good or bad. I'm open to criticism. So of course we're going to build this as well slowly over time. It's not something that's just going to build up dramatically. I'm not expecting my one asset that I've bought so far to go to the moon tomorrow. This is something that's long term. I expect to grow this over many years. I really do not expect this portfolio to change massively in the next year, especially given the macro conditions that we're in. So yeah, just a little introduction about what I'm doing essentially, and I hope that makes sense. If it doesn't make sense, drop a comment down below. I'll try and explain more as we go through along this series. So this is the 0 to 6 figure portfolio. The platform that I'm using to kind of showcase this portfolio is called Coinstat. You can make a free account. I'll leave a link below. You can click the referral. I think I get some extra points, which you can use in the reward shop. I'm not too sure actually what you can use it on, but yeah, I'll leave a link in the description below so you can go and check it out yourself. And it's a nice platform because you can basically connect your portfolio with your MetaMask or kind of any other wallet. Personally, I'm not too keen on that. Don't really like to connect my wallet to places that I don't really have to. You can do what I do and just manually insert my transactions because I'm not really a trader. I'm not really making many transactions at any one particular time. This is going to be a long-term portfolio, so I'm holding these assets for a while, but I do appreciate that crypto does change very quickly, and if I have to swing in and out of certain positions depending on various narratives, I will do that. So I am able to keep up with what's going on in the space generally. That's why I make these videos, of course, and I appreciate that not everyone can do that, and so generally for a lot of people this portfolio is probably not going to be right for you. And yeah, like I said before, this is a risk on asset, a risk on portfolio. I'm comfortable with it going to zero. So yeah, with all of that being said, let's just talk about kind of what I've done so far and why I've basically made these decisions. So at the moment, we've only got one asset in the portfolio. I'm sure you guys can see on the screen. We've got FXS, Frax share. Why have I not got any more assets? Well, I will. It's just a matter of time, really, where I slowly will build up my positions. You know, you shouldn't put all of your eggs in one basket, and you certainly shouldn't over diversify either. I think in crypto, over diversifying is probably something that I'm less likely to do, because I think crypto is still relatively early. I don't think it's early anymore, but I think it's still relatively early, and based on that, I think over diversifying is not really a good idea, considering that most things are tied to how the big blue chips like Bitcoin perform. So, you know, if Bitcoin is doing well, then generally you'll see the rest of the market do well, and if Bitcoin is doing bad, well, I'm sure you guys are all aware, generally the rest of the market performs badly. Everything is still relatively tied to Bitcoin and somewhat to Ethereum as well. So it's still a long time until that does change. So for the time being, yes, I'm not going to overexpose myself to too many positions at one time. What you might find though is over time I will have lots of positions that I've gone into and out to, and that's because in crypto narratives do change very quickly, and I will try to be where the narratives are. Now, of course, I think some of these assets I will hold very long term, and I will try to build them up over time. But yeah, that's pretty much it. So Frax share. Why have I bought Frax share? It's such a random crypto asset, you know, for a lot of you guys watching. I've not really mentioned Frax on my channel before, but what I have mentioned a lot on my channel is stablecoins. And, you know, stablecoins for me are a really important piece of crypto. I think it's having the ability to buy stable assets anywhere in the world, get exposure to, in most cases, the US dollar, which at the moment is performing very well, but also I appreciate, you know, being able to own other stable coins based on other cryptocurrency, based on other fiat currencies such as the pound, the dollar, the yen. I think it's a really very important thing, and I think it can play a key part in a lot of people's portfolio, especially as I mentioned, being as risk averse or generally risk averse, especially when you're creating your crypto portfolio, having some sort of safety margin in place. Now, you might think, well, Frax share, this is not a stable coin, but Frax is a stable coin, and Frax share links very closely to the Frax stablecoin. Now, if you're not too sure about how the system works exactly, I have written a newsletter article, so go check out my newsletter. You'll read the recent one, the recent issue that I've created, and have a read through it. It's quite a long and complicated issue that I've written, but it kind of explains the relationship between Frax and Frax share. If you guys are interested, perhaps next week or the week after, I will do a deep dive into kind of how the system works and why I think it's possibly a good asset. Nope. The Frax team, there's 8 of them. They work incredibly hard, and they've been shipping constantly since inception, really. Now, during the lunar crash, Frax had a relatively large market cap. I'm not talking about Frax share, which I've bought. I'm talking about Frax, a stablecoin. It was somewhere around 3.5 billion. That's kind of settled down and kind of come down to around 1 billion, as a lot of people kind of wanted to be out of anything algorithmic. Frax is a algorithmic but also collateralized stablecoin. Is a bit of both, really. And in order to mint more Frax, you need FXS. And the amount that you need is basically based on something known as the collateral ratio. At the moment, it's around 90%, which means if you wanted to mint $100 worth of Frax, the stablecoin, you'll need $90 worth of USDC or stablecoin. It's actually USDC at the moment, and $10 of FXS. So generally, if the Frax stablecoin grows in market cap, you will expect a lot of this FXS to be bought up and to be burned in that transaction. So that's essentially how it works. The reverse is also true. So if you had Frax, a stablecoin, and you kind of wanted to get your collateral and FXS out, you can do so. So you'll be minting, you know, whatever the percentage of the collateral ratio is of the USDC, and of course the rest of it in FXS. And that's pretty much why when the market cap of Frax went from 3 billion down to 1 billion like it is today, well, as you can imagine, that is a lot of FXS being coming into circulation, and of course it was sold off, resulting in quite a decline in its price. So if you really want to know about why I've bought it, well, yeah, the article will tell you everything about it, but I think I can briefly show you kind of what it does. I think before I do that, I just kind of show just kind of where we are in terms of the crypto markets, as a whole. Where are we? Well, of course, you all know we're in a deep bear market at the moment. You can kind of see the prices of all of these assets as well at the moment. One thing that you might know is that, we've at the top of this ranking, we've got Bitcoin, Ethereum, and then we've really got three stable coins here in a very short period of time. We've got Tether, USDC, and BUSD, and these are all three centralized stable coins. I think we've seen that people do like the idea of a decentralized stablecoin. Of course, Frax is that, or in the process of becoming more decentralized. So I think it will be really interesting to see kind of how it can grow. Given the market caps of these are, you've got 130 billion dollars worth of crypto stable coins here, and you've got Frax sitting at just $1 billion. So I think Frax can definitely take some of that market share away from these stable coins, and in doing so, I do expect, or I'd like to think, that FXS can go up in price. Of course, we're in a bear market, so don't be surprised if we see another 40-50% drawdown. Honestly, anything can happen in this space. So if that does happen, it wouldn't surprise me if this goes down 50-60% again. If it does, I'll probably be buying some more. So yeah, where are we in terms of the market at the moment? Well, I thought I'd just show you this graphic showing the kind of total market cap of the entire asset class. We're currently sitting at around 900 billion, just under $1 trillion, and we've kind of been at this level since June, really. So June, July, August, September, we're in end of October now. For about 5 months we've been trading sideways like this, and I expect this to continue for quite a while longer, really. As you've seen in previous bear markets, they do last a long time, years even. So like I said, this is a long-term thing. I wouldn't be surprised if we carry on trading sideways for a little while longer. And the last time that we were at these levels was really in February 2021. So it hasn't really been too long since then. It hasn't even been 2 years since that point, really. So yeah, don't be surprised if we go into this kind of long phase like last time. This isn't even the full thing. Look, the actual last bull run, basically, if we go from peak to peak, was 2018, end of 2018ish, something like that. And here we are, end of 2021, which who knows, it could be another 3 years until we hit all new all-time highs. I don't know. Like I said, things change, and you can't really use the past as a good identifier for the future. Lots of coins that were in the top 10 around this point in time didn't perform well and didn't even reach all-time highs in this market. And so that might happen again. You might see that some of these assets here, XRP, Cardano, Dogecoin, etc. Who knows? I might be wrong here, but some of them might not actually hit their all-time highs again. So we'll have to wait and see for that. Anyway, let's have a look and see kind of how much of a drawdown we've had with some of these assets as well. So if we just take Bitcoin, for example, we're about 72% down. And if we take some of these more risk-on assets, let's have a look at AVAX. We can't even get it fitted on the screen. We're about 89% down here. If we take a look at Solana, we are again 89% down. If we look at Cardano ADA, we are 88% down. You kind of get the trend where we're going at the moment. If we have a look at FXS, which is the asset that I was really interested in, that actually hit all-time highs this year. However, we are around 87% down, maybe a bit less, 87% down, yeah. So you can see that a lot of these risk-on assets, Frax share, a lot of these layer ones, if we look at even infrastructure like Chainlink, we are, I believe, probably somewhere similar. 86%. So we're around that 86 to 90% range at the moment, down from all-time highs, with Bitcoin and Ethereum probably performing a little bit better in the 70s. Quite a hefty drawdown, and again, you have to just remember that some of these assets, like for example Cardano ADA, went down 99% in the last bear market, and the difference between 90% and 99% is another 90%. So if some of these assets do go to that level again, there are significant drawdowns still to come, but we'll obviously have to wait and see for that. I think what I wanted to do is kind of end this episode with is, and spend the remaining of this episode, is just kind of talk about a little bit more about why I went for FXS or Frax share. And you know, as far as I know, and from all the research that I've done, Frax the kind of protocol, they've created a number of different products. Obviously, the first being the Frax stablecoin, which has grown significantly. And you know, you can see directly on Curve, if you go to Curve, and Curve being probably the largest decentralized exchange around at the moment, maybe second to Uniswap. Well, you can see on Curve directly, if you just have a look and just see kind of which pools have the highest total value locked. Well, of course, you've got the ETH and the staked ETH pool as number one. You've got the 3 pool, which is the big stablecoin pool. And look at that, just directly underneath it, you've got the Frax USDC pool. And you might think, well, where the hell did that come from? Well, something very, very interesting came about. One thing to also note is that the 3 pool has around $792 million of total value locked in the pool. So that's a lot of money in that pool. However, if you look at the Frax USDC pool, we've got $777 million in this pool, a significant amount of money in this pool. And if you have a look at the rates, the rewards that you're getting, well, with the 3 pool, it's only 0.7%, 0.71% in Curve rewards. But if you look at the Frax USDC pool, it is like 5 times higher, and you got, you know, up to 3.67%. So significantly higher rewards for parking your stables in this pool rather than this pool. And Frax's dominance over Curve, and they do this by having a significant ownership of another protocol's governance token called Convex. Again, I will go into all of this in a lot more detail if you guys are interested in a future episode. So Frax has a lot of convex, and they're able to basically direct emissions on Curve to their own pools, and as a result, they're able to draw lots of liquidity. Now, the other thing that really has increased, or the bull case for me, in my opinion, is if you are going to create your own pool. Now, imagine you're a new stablecoin provider. We had lots of stablecoins in the last bear market, and you wanted to create your own pool on Curve, because everyone goes to Curve to trade their stablecoins, don't they? Well, you'll go to the factory and you'll basically create your pool. Now, one of the things when you create your pool is you have to basically pair it with one of the pool types. And previously, the main pool type was the 3 pool. It's what's known as one of the base pools. You have to pair your new stablecoin with one of the base pools. And so that's one of the reasons why the 3 pool has grown so significantly. Because every stablecoin, if you've got MEM, for example, and you can see right here, well, look what it's paired with. It's paired with the 3 Curve pool. It's paired with this. So, you know, this 140 million, well, 70 million of it is Magic Internet money. And the other 70 million is liquidity for the 3 Curve pool. And that helps to grow the liquidity for this pool. It grows larger and larger and larger. And we all know that having larger liquidities is better. People can exchange with less slippage. It's easier, cheaper fees, etc., etc., etc. And, well, what did Frax do? Well, Frax have got a strong relationship with the Curve team, and they've actually managed to become their own base pool. And they've got their own Frax BP. And that's fantastic because there's only 2 stablecoin pools. So now, if you're a new protocol, you can either pair with the DAI USDC USDT 3 pool, or you can pair directly with the Frax USDC base pool. Now, if you're a new protocol, which pool are you going to pair with? Are you going to pair with the one who's offering only 0.7%, or are you going to pool with are you going to pair with the pool offering 5 times that reward? Well, clearly you're going to offer yourself to the Frax USDC pool, and that's just one of the reasons why I think Frax is going to grow significantly, because there is so much more liquidity coming, and the power that Frax have over Curve with the convex emissions that they can, or the Curve emissions that they can direct via convex, well, they're going to direct it towards your pool that you pair with. And I think that's one of the great things about it, because if you're a stablecoin, like for example Magic Internet Money, you don't have to use your token as a farm token to basically draw liquidity. Frax will do that for you, and I think that's fantastic, because I think every single stablecoin, look at this, you know, there's so many stablecoins here. We've got MIM, AUSD, SUSD, you've got the Euro stablecoins, TUSD, USDD. There's so many different stablecoins here, and all of them want liquidity. Now, they're clearly going to pair themselves with the Frax USDC pool because A, the rewards are so much higher, and Frax can give them incentives so they do not have to use their farm token as initiatives. Therefore, their farm token can hold their value a lot better, and I think all round, it's a fantastic idea. I think that should also cause the Frax stablecoin to grow further, but of course we'll wait and see. Now Frax has lots of other products as well. They've recently announced Frax ETH, so they're joining they're competing against Lido in the staked ETH wars. I think they've got a better product there as well, and I talk about that in my newsletter, so have a read of that and let me know your thoughts on that. They have lots of other products as well. They've got FPI, which is their stablecoin pegged to CPI, and they're building lots more. They're building another product called Frax Ferry to help kind of integrate Frax with other blockchains as well. I think especially with bridging, I think Frax has a lot going for it at the moment, and they've got a very competent team. So let's see what happens. I will go into more detail in a future video if you guys are interested about Frax and kind of how they have power in the curve wars and basically how they're controlling the curve wars at the moment via their ownership. We'll talk about that in a future video. But that's pretty much what I wanted to cover today. In the next video, hopefully, maybe I'll have another asset here to talk about. But we're going to grow this portfolio over time. At the moment, you can see I'm down, 3%? But hey, these fluctuations will happen. We're here for the long run. So that's all I've got for you today. Make sure you smash the like button, subscribe to the channel. If you like this portfolio series idea and you want to see more, then let me know. I'll see if I can create one every week or every other week and kind of give you regular updates on it. So that's all I've got for you today. Smash the like button, subscribe to the channel, and of course, I'll be back with another video soon.